Good morning, everybody. It's Chris from Serene Education with the 4 majors announced update for the 15th of October 2013. Okay, this morning's analysis done using the FX8 Ultimate template. I'm going to start with the euro to start with. On the daily time frame, let's have a look and see what's been happening recently. So, last couple of days, what happened in particular yesterday for Monday? A very indecisive candle after a very indecisive start on Sunday evening. However, we did finish last week very indecisive, but still above the most important thing, the 50% retracement level. Okay, on my monthly, this is my monthly fib level, and you can quickly see the price has been above this level for some time, however not making any higher highs, which was the consolidation high. And this happening at the early part of October of this year, and subsequently you've seen a couple of bearish engulfing candles. However, prices fell to actually break that 50% fib level here at the 13,4900 mark. So price has been consolidative here, and this is primarily because the euro has been very, very unsettled because of what's happening to do with the US dollar and the debt debate, ceiling debate, as well as the shutdown that's been going on for so long. So price has been very, very consolidative as they've been trying to thrash out a new deal. Because this on 17th of October, this Thursday, is D-Day. So the longer that continues, the more indecisive, the more hesitation you're likely to see in the market, which is what we have seen across the 4 majors in particular, and hence the reason why we have a lot of indecision candles. In this case, dojis and spinning tops. This is still above. There is word out that they are quite close to coming up with a plan. So as soon as possible would be great. Thank you, guys. Let's get that going. But so what has it left us with? Very indecisive candles, and if you do see indecision, you don't want to be trading it. You rather want to see a nice decisive move from the market. So that's what we're waiting for at the moment. Daily candle we have, daily scenario picture is we have a red arrow, but the candlesticks are very much positive. Our long-term sentiment is still very much up. Monthly and weekly still looking positive. The daily 4 hours still looking positive. However, we're seeing a bit of negativity on our daily in particular. But the majority of the chart is telling us we should be looking for buying sentiment. Selling sentiment on our smaller time frames, 5 and 15 minute chart. However, if we drop down to our 4 hour time frame, we do have everything in favor. However, our R squared is not there, so it's not telling us it's genuine sentiment. If you look at the past 16 hours, we had a potential tweezer top over here at a prior resistance level, which is the trend line, the intermediate trend line low. We had an engulfing to tweezer top here just recently. So a lot of indecision here, guys. If this is to be a genuine negative candle setup, then ultimately we want to see a bearish engulfing candle closed lower to confirm that. We did get one over here, but not a really fantastic bearish engulfing one nonetheless. We do need to see a very strong bearish engulfing candle to confirm that price is still looking lower. If that does occur, then ultimately we should be looking for price to reattempt the lows of here. However, you look at the 4 hour time frame, we have everything that's in our favor. Moving averages, for one, the short-term moving averages are not crossing over. The 20 and 50 are pretty much flat, hence the reason why price is very consolidative. We saw the same thing over here. If price is very much ranging, you tend to see the moving averages pretty much flat. Blue arrow, blue candles, RMO above, and the MACD OSMO indicator is above. However, dark green, so it's telling us there's no true momentum yet. So what we're looking for is, if this is to be a genuine buying opportunity or a positive sentiment, we do need to see a bullish engulfing candle, and then we need to see the RSMA level over here going bright green, and the RMO to make a new histogram high. That would be fantastic. Get above this consolidated range in particular, and then we can start looking to that prior high that we saw recently. They've just come from the major high up here, and that's roughly from the break of this high to that level. You're looking at a comfortable 59 pips and change. So got to wait for that. Will it occur sometime today with the news that we might come up with a potential debt ceiling debate outcome? That remains to be seen. Euro, we have the German economic sentiment news out today. We also have the economic sentiment for the ZEW, FN meetings as well. So there's a bit of news out for the euro, but I presume, as what it's been doing the past week, in fact, is the fact that they're just holding their breath to see what the outcome is going to happen in the US market. So moving on to the sterling. Here again, we've also seen consolidation, and in fact, the past couple of days, the end of last week in particular, Thursday, Friday, Sunday and Monday, very, very much flat. You can quite clearly see that very, very small candles. And this is all taking place under a psychological round number in terms of the 1600 mark. You can see the 1600 actually supporting price quite nicely. However, we have seen price reverting to the downside. Price actually attempted the weekly fib here, the 23.6. These red lines constitute my weekly fibs. The blue lines to my monthly fibs. And you can see that the weekly fib here acting as resistance recently. We had a breakout, very indecisive candle, more selling power through here. We wanted to see a nice bullish engulfing candle to confirm that. The candle was bullish, but not all that bullish indeed. We needed a more genuine candle. And subsequently what happened was we had a bearish engulfing candle, which engulfed the prior 2 days at this level over here, which subsequently then meant price was likely to fall lower, which it did, and moved lower into the 1600 with the price support and resistance level. And now it's actually consolidated there. Then last week Wednesday we had this bearish engulfing candle closed lower than the 1600, now trading at the underside. So the long-term, the overall setup now on the daily was one of positiveness. However, intraday we're starting to look at negativity, and you can quite clearly see that's the case. Long-term upside, however, intraday very much negative, and I think the longer it spends time underneath the 1600, the more likelihood is price is likely to favor the downside. A lot of indecision candles, and that's primarily what's happening on the US at the moment. Regarding the US, everybody's quite consolidative at the moment. They don't want to be trading until we actually hear some news out of the US regarding the debt ceiling debate. So until we are still unstuck with that, then we are likely to see further consolidation. If that consolidation still occurs at the underside of 1600, the more likely is we're going to see some negativity. You can see the intermediate trend at the moment now, the long-term trend up. The intermediate trend, however, is one of downside. And if you look at where the intermediate trend is now dissecting the horizontal line here at 1600, you can see where price is trading right now, quite close to that. RMO is still very much up. The candlesticks are still very much up, guys. So we know the long-term sentiment is very much positive. The only problem is we're seeing a lot of consolidation at the underside of a major support and resistance level in the shape of the 1600. A lot of price support through here. Now we're trading below it. And the rule of thought is if it's price support becomes new resistance if it breaks it. Okay, RMO is still above. The MACD is clearly below and consolidative and bright red because we don't see any genuine selling sentiment. Now we look at our 4-hour time frame. We have a lot of indecisive here. We have a lot of blue. There's more blue than red. The R squared is not complementing that buying sentiment, however. So let's go down to that 4-hour time frame. Let's move this over so you can see it. So you can see price has pretty much been ranging below that 1600 mark. Price support is now very much a resistance level. However, saying that, price is still trading above the institution. You can quite clearly see the institution moving average below price, and if that's the case, then it's still supporting price. And if you look at what happened recently, we are seeing higher swings. So it's in a squeeze pattern below the 1600 level, which is below a resistance level. So in and around this area here, we should see some sort of action, whether it be up or down. Either way, I'll need to see a more confined or more defined engulfing candle lower to be more of a genuine shorting opportunity. And if this is to be to move higher, I'll need to see a nice bullish engulfing breakout to confirm that we are now seeing the start of the continuation of my uptrend, because remember the candlesticks are still positive on my daily, so I'm still looking for potential upside. That will be the case. So until then, got to be patient. These candles are far too small, very indecisive. It's in a consolidative range on my 4-hour. I do need to see something more from the market. So until that actually occurs, I'm still holding, I'm just standing aside and waiting for that confirmation candle. You can see the RMO here, which is more trend-like, flat, non-directive. Okay, very, very important. US dollar Swiss franc, let's have a look at this particular pair. If the euro is climbing, we expect the US dollar Swiss franc to be falling, and subsequently that's been doing. A lot of lower lows here on the daily. Quite clearly you can see that the on our indicator box, the long-term sentiment is very much negative, and the R squared is complementing that. However, intraday we're starting to see a bit of positiveness coming through. However, as it stands at the moment now, we are consolidative. Primarily what's happening in the US market. That's primarily it. A lot of the majors out there against the US dollar are consolidative as we speak. So we've got to see more from the market. If I go into my 4-hour time frame, there we go. You can see that consolidative range. Price has failed to really move higher than the 91.33, for example, and failed to move lower than this level over here. You can see it's been very much consolidated between 2 points. There, in fact, was lower. Now it's moving back into this consolidative range. Got to get above it or below it. Okay, I need a more directive candle. You can see a lot of these candles are very wicky, very small trading ranges. I need a more decisive candle. You can notice that the RMO is plotting trend. You can quite clearly see we were lower. Now you can see what's happening over here as we range. The RMO is all over the place. It concurs that we don't have a true trend yet. My RMO indicator is below, so it's telling me on my 4-hour that it's negative. However, it's negative consolidation. So we are trading short, so it's short, a bearish consolidative trend. Okay, intermediate trend intraday, quite clearly making higher swings, which is good. Okay, but if this is to be positive upside, got to get above the institution and got to see a nice bullish engulfing counter. If that comes through and we break above here as well as the institution moving average, we can then target our weekly fib, which is above us, and from the institution to that level is a countable 100 pips. Okay, so we've got to wait for a decisive candle. If it's to still be bearish long term, we do need to see a break below this here. A nice bearish engulfing counter goes lower. The other side would be if we do see any positive news from the US market sometime this week, we get a bullish engulfing counter move higher, then we should target our long-term support and resistance level highs, which would be my weekly and monthly levels to the upside. Last pair of the day, US dollar Japanese yen. You can quite clearly see we've been in this consolidative pattern for quite some time. We have a very strong support, a trend line support here on the side. You notice that the institution moving average was supporting price for a very, very long time, and in fact, the candlesticks right up until April of this year were very much blue across the board. However, since then, we failed to make new highs, and subsequently we started to see more hesitation in the market, and we've seen more red coming into play. You notice very strong trend over here, for example, and then subsequently from here onwards, we're seeing price moving back between 2 points from one side to another as we go into this wedge pattern. We have had a breakout recently, and price has bounced on a number of occasions on the institution. However, recently we saw the institution actually being breached for the first time in a full year, guys. So more uncertainty for the US market has seen that breach occurring. However, price still wanted to attempt to move higher and subsequently bouncing higher, and then it's back up above the institution again. So very indecisive on this time frame. Quite clearly see over the past week or so we have seen a price reverting back up towards the institution, and the rule of thought is if it maintains above the institution, then we should be looking for positive upside movement. However, you can quite clearly see that there's more selling sentiment coming through, and the R-squared is complementing it on our intraday time frames, 5, 15, and 30 minutes. However, on our long term, we are seeing more positiveness, but the R-squared is not generally confirming with that. So we are very hesitant in the moment now. In this particular pair, I'm looking for more of a directive candle. I want to get out of this consolidative range. You can quite clearly see how messy it has been. It's very hard to trade this. Very, very indecisive nonetheless. So primarily for me, I've actually asked for a trigger alert to be well above my monthly fib here, above the 100 level, and I'm looking for a nice bearish engulfing counter close lower than my weekly fib here at the 23.6 before I even contemplate trading this particular pair anytime soon. That's it, guys, short and sweet. Please, if you are interested in trading any of these Serene Education templates, to please get a hold of us at info@sereneeducation.com. If you are using these templates, guys, please back it up with sound management rules and follow the rules of the template. Very, very important. They're there for a reason. Depending on which time frame you're using, please make sure that the indicators are helping you confine in that. Look at the long-term sentiment. If you are seeing price moving against that long-term sentiment, i.e. here bullish long-term, but selling intraday, you know that you're seeing a consolidation. Okay, you want everything to be moving in the direction of the long-term sentiment to be more profitable. Okay, so I'm going to leave you with that. I hope you have a fantastic trading day, and I'll catch you guys first thing tomorrow morning. Until then, you guys trade serenely.